Good morning, welcome to Nifty Prediction. My name is Narendran. To join my WhatsApp group, I'm charging 500 rupees per a month. You will get advanced prediction details as well as calls in the group. And if you like my research and if you want to support my research, you can donate me using this Google Pay and Phone Pay and Paytm. Let's go to the Nifty, how it has closed on Monday. Nifty ended up in the negative as expected, 14,359.45 points and 258.40 points in the negative, 1.77% in the negative. Opened around 14,306.60, which is well below the previous closing, and the low went around 14,191.40 and high went around 14,382.30. Let's go to our prediction review. In our prediction, we clearly told that the market is having the bearish trend of 1.99% chances to hit on Monday. So we kept all in the put option and initially bought, and on Friday itself we bought it because we have only negative side target, we don't have positive side target. But the data is clearly indicated that positive side, which is 75%, but I mean this is actually volatile. The three indications are in the 75% positive, but in our data which is clearly shown that negative average, which is 1.99. so that is where our target is. So 290 points is going to hit on Monday. That is where our prediction is, because 80% of the time, so whenever we get this kind of days, 80% of the time it always it's the negative average. That is the thing. So we always bet which percentage is higher. So 20% of the time it has a chance to fail, but still we want to go with the bearish trend. We know if the market is going to end with the 20%, means the pre-opening itself it will give you a signal. So but we always bet in our data which side is going to happen in the particular way. So that is the reason we bought it put option when the market is reached at 680 range on Friday, 14,680. That is the level which is our positive side target. So this month April we bought it the put option when the positive target reached, because the downside target which we have pending of 13,599.85, this is the pending target we still have in hand. But today the levels of low and high is not matching, so it has opened up one more lower target as well as one higher target. So if you check the 14,382, which is not matching in the data, you can check even in the average as well. So it is not matching anywhere in the data. So the high is not matching, so that the next level of high is having a target. So we have a new upside target in the April, which is 14,404.43. so this is the positive side target we are having, which is a small target, because from the closing it is not much bigger deal, which is roughly 40 points. So that target we have got. On the downside is also not matching. Normally we used to get the perfect match, but this is the day which it not match on the both side, 14,191. so it is not matching anywhere in the data. So 14,167 is there, so which is not match. Normally we need to match with 3 points or 10 points. That is the perfect match. If the data is not matching in the stop loss range or the perfect range, then it is going to be a next target. So the next target is on the downside, which is 14,167.62. so we are already having a target of 13,599.85. So one more lower target, which is 14,167.62. So what it indicates is this target might have chances to hit on the next week, if probably not hitting on the next 2 days. So this target will the market try to hit on the next 2 days. So we need to focus on this particular target first, and then go towards the next target. It might have the chances to hit on the next 2 days as well, but still, we need to play a little more safe as well, because if you buying on too much with this target, if it is not hitting and it is hitting on the next week, means the people will have chances of losing money. So the positive side target, which is 14,404.43. So these are the targets we are having. Positive side is 14,404, negative side is 14,167, and followed by 13,599. And let's go to the group calls. What are the calls we given in the group? We already holding so much of put option, and these are all the data, and these are all the support and resistance levels, uh, and these are all the stop loss levels. And we clearly specifically pointed out that we are going to hold this put option for at least 3 to 315. But fortunately, what happens is the pre-opening itself, our target got hit. So because our target is specifically 290 points, so that is the main thing, because 80% of the time the negative average will hit on this specific day. That is what the hint which we given as well. So it is clearly shown that the target, if it is hitting, means we need to exit. Otherwise, keep stop loss and go for the next target of 13,599.85. So Monday itself having chances to hit this particular target, means we may get good profit. But Monday it was not happened. It happened only that 400 points downside. So we know we want to, and the SGX Nifty is indicated at 654, around 161 points. That's that time in the morning. So we know that we are going to focus on 1.99% on the negative, and after that it has started to fall down. Even in the SGX Nifty, it is shown around 200 points on the downside. Unfortunately for us, the pre-opening itself, the pre-opening itself, it has hit the 1.99%. So what happens is, we wanted to exit on the opening itself, or keep stop loss and trade safely. That is the idea, because we have a due of 13,599.85. So that is the reason. And within almost 2 minutes, all our clients are booked profit. It is almost huge profit. See, 1,08,000 rupees profit we booked within no time after the pre-market opening. And then still I asked to keep stop loss, because that is the method, because this is the thing we bought it on Friday. You can check the date, 16th April, and we bought it somewhere around 16. We took full risk, because the target is huge. So we want to take full risk, no stop loss at all. We want to hold it for Monday, and we know Monday is going to fall minimum of 19%, per 1.99%. So we want to keep stop loss at 450, because this is a volatile day on Monday, so it might recover the low towards to positive side. So we kept the stop loss of 450, and we booked a profit. It given a good profit as well, each and every clients. But initially what happens is, I kept matched in the level, but low is not matched. 14,167, but high is matched 14,326. That is the reason initial stage the market is fall down bit heavier, but still the low is not matching. After that, it has broken each and every time. After the stop loss, we booked a profit somewhere around 21,750. Some people have booked profit of 30,000 as well. And we got a good day, because whatever we bought, each and every price has given good profit. 14,400 we bought it somewhere around 69, and it has given somewhere around 234. So that is where we given in the morning 9:20 at the price of 234. So everyone got a good profit as well. After we sold, it has came down. It has closed somewhere around 140 odd points. So that is a very good day. So each and every calls, because we given a combination call as well. So if they want to exit, where we need to exit 14,000 put option, we bought it somewhere 56 odd. It has went 14,000 somewhere around 100. I mean close to 100. It is some traded somewhere around 90. These are all the calls which we booked at stop loss of 81 when it is reached somewhere around 90, which is 14,000. Put option at somewhere around 919. Those are all the levels we exited. And this is the call which we given after booking profit. Some small put option we asked to hold 13,800 for somewhere around 29 to 30. Overbooked profit this 14,700 call only. Safe traders specifically asked to avoid trading. And in between the market hours, we given a signal for Tuesday market as well, because the Tuesday market indicated that 80% chances of positive side, but still evenly poised came, so that we will try to go with the BTSD combination, because evenly poised comes means all three results are possible with 33.33% chances, bullish, bearish or flat. So we need to go with the combination only. That is where the thing. And we given some call in the call option and put option combination. So the call option we want to exit at 13, almost in the cost price, which is 13 to 14. So we exited with a stop loss of 13. So that got it. That is what we given here. After reaching 20, it has fallen down and hit the stop loss. And these are all the combinations we want to follow. So specifically at 3.8, I given this to watch out, so that we can go for a combination, which the combination only for the high risk trader clients. We bought it 14,500 call option for 55 and 14,100 put option for 55. Both combination we gone BTSD call. And let's, these are, because that is the level it has closed. Let's go to the prediction for Tuesday, because the evenly poised means it has a chances of closing like this. So it has a freedom. The Nifty has a freedom to close anywhere, wherever it wants. It can go bullish, bearish or flat. So we need to play much more cautiously, otherwise we would have lost. I mean, we will easily lose money. And small traders specifically avoid trading is advisable, otherwise you need to keep both options in hand, minimum of 10 rupees. I specifically asked to wait for my clients. This is the data for Tuesday. Data is indicating evenly poised 8:8, so which means all three results possible. Volatile day, and two indications are showing positive, which is 50%. So we need to play with both options in, and these are all the support and resistance level. So anything opens below this level, which is more than 8 points in the negative, which attracts the bearish market, which it might go to minimum of 90, average somewhere around 70 points, 189. So it might continue if it is not breaking this overall average. This is a stop loss you need to maintain for the extreme bearish. 14,392.43 is the stop loss for extreme bearish market. If this particular stop loss is not hitting, even the recovery market will fall once again to any level. So extreme bearish market stop loss is not hitting means you can hold the put option. On the run, if the market is opens in between, means it will be a volatile market. According to which side is it is going to break, it will go bearish, or which side it is going to break, it is going to be bullish. If anything opens above this level, pre-opening more than 60.31 points, it is a extreme bullish market with a stop loss of 14,003. 82 minus 10 points, so 14,372.43 is the stop loss for extreme bullish market. Normal bullish market stop losses need to be maintained in support level 1. Anything opens plus 1 point means you need to keep stop loss in this range. 14,342.27 is the normal bullish market stop loss. It might go down to bullish level, which is 157. Normal bearish market stop loss, anything opens in even in a point negative, you need to keep stop loss in the range of resistance level 1, which is 14,373 plus 10 points, so 14,383.81 is the normal bearish market stop loss. So it might go towards to the negative average. So it is a volatile market. We can expect a volatile between negative average to positive average. This is a one kind of a normal volatile market. Another normal volatile market will be in the bearish, which is going to be, it might not break the volatile level 1, so it might go in between the levels of volatile in the negative. So it might oscillate like this and this and this. So it will step by step it will go towards to the negative side. On the other hand, if the market is recovers, means for example, if the market is opens extremely bearish somewhere in the 50 60, and if it is getting support in the negative average, the low is perfectly matching, means it might have the chances to recover and goes towards to positive average and reach this 14,500. It might have closed in the positive itself, or it might have fallen down after reaching also. So there are chances, depends on the time decay and time limit, where and how the market is going to reach, which time it is going to reach. So we need to closely monitor this negative average. Low is matching in between these 14,008, so 14,289, 14,300, 14,244, 14,266. So these four ranges we need to watch out closely. The low is perfectly matching, means it has a good chance to recover from the low towards to positive average, because 80% of the time it has a chance to hit. Only if it is not recovering, it is not breaking the overall average, only it has a chance to go extremely bearish after some recovery. So let's see how the market is going to be, and this is the data for par value. Anything opens below this level, 126 points below that level, attracts the negative side, which is up to low, which is 170 points, 177 points. So these are all the indicators the market will move. How the volatile data, we can see this kind of trade between 232 47, 239 247. Another kind of thing is 350 to 122, that kind of a move, even up to all those levels also possible. And these are all the stop loss which I explained you, I given here. For extreme bullish market, need to open above that level, keep stop loss here. Anything even 1 point positive, keep stop loss here. And this is the important thing, pre-opening, anything below this level we need to keep stop loss here. But the extreme bearish zone is too close, because only 8.62% is only, so bearish, extreme bearish is having a chance to happen. But still we need to play cautiously, because of the positive side 80% chances are there, so it might recover any level. We have a pending target which is from last month, we still tracking 25 days, still pending. It has opened around 12th 3rd, and we know sometimes it's not getting it, but this month target we used to get to hit quite frequently, 14,404.4043 and 14,167, those two targets. New target which opened on Monday, and the pending target which is 13,599, which is pending almost, this is 6th day. So these are all the two pending targets. Let's see how the market is going to give us on Tuesday. Thank you.